Hey, this is Dan Frio, the rate update. Today we're going to talk to those out there that are building a home. So is this your situation? You started it last year, you got pre-approved and you're at 2.875 and your lender's saying, can't lock you in. We got to wait till at least 30 to 60 days before we know the home is going to be done. Now rates are in the fours. What do you do? Stay tuned. That's what we're going to talk about next. Well, if you're freaking out, I don't blame you. Okay, so why I want to talk about this is the phones are ringing. I can literally say ringing off the hook. People building homes and they're freaking out. One example is this. Here's a post that I just found on my YouTube comments, and I reply to every one of these comments, usually at least that day, if not the day after. But look at this one. WAF LLC just posted. I locked my rate in yesterday at 4.125. I was pre-approved at 2.75 in July. The home is supposed to be due with February 15th closing date. Unfortunately, we can't close due to the lack of building materials and closing costs and everything until April. Okay, so what do you do? How do you protect yourself against this if you're in that situation? So let's break this down. Do I foresee rates getting lower? No. Okay. Do I foresee the supply chain fixing and homes being built faster? No. So how do you protect yourself? And that's what we're going to talk about right now. So here's the scary thought. When you got pre-approved, you probably have no idea what your debt ratio is. And that's a key element here. Okay. Here's why. Your debt ratio is a big piece of this equation. What is your debt ratio? Basically, think of it as your budget. And how mortgage people, figure out, can you qualify for this loan? Okay. So what we do is we take all of your debts, everything on your credit report, plus your proposed mortgage payment, and we divide that by your gross monthly income, your income before taxes and everything. On a conventional loan, you can go to 50%. You cannot go to 50.1. You can't even go to 50.001. It has to be 50% max. FHA loans and some government loans, you can go up, you could stretch it up to 57%. Okay, why am I bringing this up? Well, when you qualified maybe 6 months ago at a rate in the twos, you qualified with your debt ratio. However, do you qualify in the fours? So let's go over and break down a mortgage calculator, just see, is there a difference here and should you be concerned? Well, the answer to the second part of that is, yeah, there's a difference and yes, you should be concerned. So let's break this down. In this particular case, the gentleman that we had on here, I don't know what his parameters are, but the parameters behind this is a $450,000 purchase with 5% down, interest rate at 4. Well, he was pre-approved at an interest rate of 2.75. Okay, so that's where he is there. So let's plug those numbers in, 2.75. What does that bring his payment to? Now, this is just principal and interest I want to disclose here. So his principal and interest is $2,487. Well, he just mentioned that he just locked in yesterday at 4.125. Where is that payment? Now the payment is $2,814. All right, pretty substantial difference. All right, was this person qualified at the max debt ratio at the 2.75? Well, I hate to say, I don't know. But if he was or she was, you might not qualify now. Okay, so if that doesn't unnerve you, I don't know what will. Okay, so basically what I try to do is on all my videos, I strive to give you a game plan. Okay, why do I do the videos every day? Would educate you guys, give you ideas, give you thoughts, maybe introduce new programs to you that you might not otherwise have known about. So let's dive down this avenue. We know the house isn't going to be done for 4 to 6 months. We know the lender that you're working with only can lock for 30, maybe 60 days. Doesn't work. Okay, you don't want to be in the position that this gentleman was in. All right, let's go back to his comment, and I want to see, where he was. He got pre-approved at 2.75 and he locked in at 4.125. So that's 1.375 adjustment to the rate. Okay. So that's where I want you to focus in on. Can you afford if your rate goes up a point or point and a half from where you were pre-approved? Okay. That's question number one. Now let's say Yes, you can. Do you want to? Okay. In his situation, his payment is going up $327. He did nothing but sit on the sideline, wait for his lender to give him the okay to lock. All right. I don't want you in that position. I wouldn't want to be in that position. So what do we do? All right. So here's my game plan. We want to basically buy you an insurance policy. How do we do that? Well, we get you in a 6-month lock. Okay. The 6-month lock, what it is, or how it adjusts, or how it works, is today's rate. Normally what it is, there's a 0.5% rate buffer to that rate. Okay. And you might first say, well, that rate's too high for me. Okay. That's your prerogative. But where are rates going to, and where are they going to be 6 months from now when your house is ready? So let me explain how this would work. We go in today, and let's say this gentleman, he says his rate's 4.125 and he just locked in. So let's say that we go off of that. We lock a person in at 4.625. That's the 0.5% buffer from that rate. Okay. Now we get within 30, 60 days of your loan closing. Now we reanalyze everything. Where are rates? Okay. If rates are higher, we stick with which we have. If rates are equal to, we stick with what we have. What if, just say what if rates plummeted? Well, we do one of a few things. One, we can use a float down feature that most lenders have. 2, we can renegotiate with that lender and see how good we can negotiate on your behalf. Or 3, now that I'm part of the largest brokerage in the country, I have 130 other lenders to go to. I don't particularly care to do it that way, but if push comes to shove, that's what we're going to do because you're the boss. You know, we work for you. So my goal is to get you the best rate, the best program, and the best fees in the market. That's how we would do that. And to find out basically the details in this program, I need you to either call or schedule a meeting. How do you do that? Right up here. Give us a call at 844-775-5626 or click the button and schedule a meeting. It'll open up a calendar, give you the days and times we have available, and then we'll be there answering any and all questions that you have. So thank you so much for watching. Please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Take care.